Hi guys, Max here, and this is your daily market update for yesterday, the 18th of February. It was, of course, another tough day for equities. They seem to be getting no respite recently as volatility continued to spike and we saw declines across the board. Now, what literally happened? Well, stocks fell and bonds climbed as the week ended. Basically, all of the worries surrounding Ukraine and the Fed we saw once more. The S&P 500 closed down 0.7% for the day, the Nasdaq closed down 1.2% for the day, and the Dow Jones closed down 0.7% as well. US equity prices are now sitting just about where they were at the bottom of the January crash, which was focused more on the results of monetary tightening. We saw that little bull trap come in early February as we had quite a lot of strong earnings come out from some very important companies like Apple and Google, but momentum switched again and the last 2 weeks or so have been mostly negative once again. It is now the weekend, it's Saturday today, and it's a long weekend for US markets as well. They will not open come Monday for President's Day, so there might be some reduced volatility, some peace in the markets. But now for the rest of the markets, there were no major shifts in currencies either direction. The dollar rose 0.2% against the index for the day, but bond markets did see quite a lot of action as investors continued to seek a safe haven and they bought up bonds, pushing prices higher and yields lower. As of right now, the US 10-year Treasury is sitting at about 1.92% yield, 4 basis points less than the day before, and we saw a similar movement in other 10-year bonds around the world. Germany's fell by 4 basis points and the UK's fell by 9. Oil prices and gold prices stayed pretty consistent, but they did fall a tiny amount, about 0.1%. WTI crude is still sitting above $91 a barrel, so very, very high, and gold is still sitting at just about $1,900 an ounce, so also very high. Now in the crypto world, most coins saw moderate declines of something like 2 or 3%. Bitcoin fell as well, but mostly it held on to the $40,000 level of resistance. At the time of making this video, it's actually just below that level. Ether is sitting around $2,700, and if you pick an altcoin out of the bag, it probably fell by something like 3 to 4%. So that's what happened, but why did it happen? Well, because plain and simple, tensions in Ukraine deteriorated once more. The day before yesterday, the West announced that they have detected an increased presence of Russian troops on the border of Ukraine, as many as 190,000 now, which goes against what Russia had claimed they were doing, withdrawing troops from the border. The US continued to warn the world that Russia might be about to invade, and Russia continued to say that they have no plans to invade. The single most important development, though, is that Russia is now claiming that Ukrainian forces are shelling Russian separatists in the east of the country with increased ferocity, which comes a day after those separatists started evacuating civilians from the area over to Russia. The fear here is twofold, firstly being that if the Ukrainians are escalating the conflict against the separatists, that Russia might feel compelled to step in, maybe to invade Ukraine as a whole, maybe just to support the separatists further, and that might lead to a conflict. The second fear from this is that Ukraine might actually not be doing what Russia claims at all, but this is the start of a false flag attack that the US has been warning us all about, where Russia either creates the escalation on the side of Ukraine, or even they just lie about it as an excuse to invade the Ukraine. As usual with this stuff, who knows what's actually happening there? Smoke and mirrors are all over the place. You and I, we just don't have the information to say who's right or wrong right now. Now, this is causing problems in financial markets because firstly, it's uncertainty, which means it's difficult to price anything in, but also because a conflict breaking out would have far-reaching consequences for finances all over the world. The first and probably most impactful result would be really high oil, gas, and energy prices in the West. Russia is a major exporter, and that's why oil and gas prices spike when tensions spike, because the risk of a conflict is being priced in. Now, should this happen, should the West be cut off from energy from Russia, household costs all over Europe are going to skyrocket even higher than they already are. There will probably be shortages as well, people unable to cook with gas or heat their homes. Thankfully, we are now on the right side of winter and heading out of it at this time, but it still isn't an ideal situation. Now, inflation would also spike as well. Oil prices directly affect the price of almost everything in the world. The vast majority of things we consume need transportation, which is a major cost of production, and almost every form of transport is still powered by fossil fuels. Then we have the fact that other sanctions would be levied against Russia, and probably other countries as well if they side with Russia. SWIFT, the international banking system, would basically outlaw Russian banks. You would not be able to send or receive money from Russian companies or people, and trade and everything would slow right down. Western companies that export or do business with Russia would get hurt here as well, not just Russian companies. Now, should China side with Russia as well, which is quite likely as we've seen them support Russia during this whole ordeal up to this point, well, we might expect sanctions against China as well, limitations placed on trade, exports or imports, or transfers of capital. This would serve to make our supply chain crisis even worse. It would spike inflation further, and that's just not good for markets. Then there's just the potential change in consumer behavior that a war in Ukraine might create. People would probably try to save some money. They'd probably be less likely to start their own business, to be more conservative in their behavior, basically to spend less and take fewer risks, and that might spur on slower economic growth. The consequences of a conflict in Ukraine would be far too many to state them all. Some would be major, some wouldn't, and there will be ones that no one sees coming as well, and the market is desperately trying to price all of these different outcomes and their probabilities in, and that's practically impossible to do. So volatility is very high and asset prices are changing on a whim. Now, the other reason for the drop in equities is, of course, the Fed, as is usual. We heard from two senior officials of the Fed, Charles Evans and John Williams, that they expect a 25 basis point rate hike next month. They're claiming that a 50 basis point hike is unnecessary, and other officials are still staying open-minded, saying that stronger hikes might be coming. But it does look like the tamer of the two options is going to be the one we end up seeing next month, which is bad for inflation, but good for asset prices. So maybe you like that, maybe you don't. Now, finally, we saw a couple big companies come out with earnings reports, and they weren't brilliant. Now, Palantir's reports actually came out the day before yesterday, but they are a very popular company on YouTube. There are lots of people very bullish about it and with lots of their investments in Palantir. Personally, I don't really get the hype. I know these people tell me that it's not a consulting company and that it will be able to grow far beyond that, but I just don't get it, so I don't touch the stock. Either way though, it posted decent results, growth in every area, but it missed its earnings very slightly, enough to shake confidence in the company and force its price down 9% in one day. From its all-time highs now, the company is down over 60%. Now, Roku, the video streaming company, missed its revenue and sales outlooks, and that disappointed investors quite a lot, so the share price tanked by over 30% at one point yesterday, and that company is now down almost 80% from its all-time highs. DraftKings next, an online fantasy sports company as well, missed their desired growth numbers for new customers despite investing incredibly heavily over the last quarter, so they too got hammered and are now down 22% for the day and about 75% from their all-time highs as well. The trend that I've been seeing recently is that the mega cap growth companies like Apple, Google and Microsoft are mostly still performing well, but the smaller tech companies, the ones characterized by Cathie Wood's ARK Invest, are failing to meet up to their expectations and they're getting hammered. Funnily enough, all three of those companies I just mentioned are favored picks of Cathie Wood, and her fund has been getting absolutely ruined recently as well. ARK is now down almost 60%, really being held up purely by Tesla of course, but if Tesla should fall, which I have to say I expect it to, her fund really is going to come crumbling apart. Now that is it for the day, guys. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.